Welcome back to Income Trading 101. Today is Thursday, April the 8th, 2021. Wanted to make a quick video on Shopify. This is one of the companies that obviously did very well during the pandemic. As you can see, given the bottoming out down here in March of 2020, and it's just run since then. And it's one that I've been looking at investing in. If you own it, definitely leave a comment and let me know. Also, go ahead and hit the subscribe button if you haven't already subscribed. I make these videos every day, and it's always great to get new subscribers and to have some fun comments. I do see all of them for the most part, so be nice. All right, I've got data all the way back to 2015 here. You can see that the stock for the longest time, even though I'm going to say it was flat, it wasn't really flat. It's just that it was trading. I mean, that range is between 0 and 100. It finally broke 100 in 2017. And this stock has been consistently just on a tear, all the way up to 2020. Let's get rid of this volume info. We had the pandemic pullback, and then it bottomed out in March, really, like so many stocks, and just has it's oscillated a bit, but I mean, this is strong, and we are off of all-time highs. So this will be great. It'll give us a chance to look at a little bit of a Fibonacci retracement as well towards the end of this video. So let's go ahead and dive in. We're going to first look at moving averages. I just want to get a sense of whether or not this stock is can I see anything with the trend using a moving average? My goal is always to just trade on the side of strength. So I try to use indicators that are going to give me a sign or show me very clearly, ideally, where the trend is. You have to figure at any given time, there are stocks trending up, trending down. And if you're not a good contrarian investor, if you're not good at picking those retracements, go with the strength. So you can see what strength looks like when you had this rally back in Q2, in Q3 of 2020. You see the 10-day is higher than the 20, which is the red line, higher than the longer term, the 60. And even though we got a little chopped up and it pulled back, we still pushed higher. Actually, this is almost a bit of a sideways channel with, I'd say, a top somewhere around the around the 1100, 1125 range. And we finally blew past that in December, came back, but that level became, let's check that out, that level became resistant, or became support, right? What was resistance over here, we'll get to that, became support. We just popped up higher, and now we have all three moving averages in line heading lower, but they appear to be angling higher, so are starting to turn higher. So I bet when we take it to lower time frames, we're going to see a little bit more bullish scenario. And sure enough, at the 1 hour, you see that the even though they are very close, the 10 is higher than the 20 and higher, which is higher than the 60. So all three moving averages are in line, showing a bullish pattern. Let's take it down to the 30-minute. 30 minutes a little less conclusive because the 10 is below the 20. But given this gap move that we've got going on today, I bet that's going to correct itself here shortly. And then on the 15-minute level, even though all three averages are close to one another, really close to one another, they're within a couple dollars of each other, they still are very much in line, with the 10 period being $2.70 higher than the 20, and that is $2.40 something cents higher than the 60. So so at the lower levels, you're seeing more of a bullish pattern, a little bit more strength. I mean, this has certainly been a bullish indicator since this low that we had back here on March the 26th. Let's kick it back out to the day. Take a look at a little bit of a MACD just to see once again where strength is and which direction it might be pointing to. So no surprises here. You had a big cross on the daily, and now we actually have crossed over in the daily below the zero line, so it appears to be heading higher. I've talked on other videos about this, but I like to see both the MACD and the signal line. That's the blue and the red line here. I like to see those cross above the zero line before I really trust the signal. This is very interesting here too. At the 1 hour, you had a crossover that happened on March the 5th. It crossed the zero line on the 12th and started to go. You could see price went a little bit sideways for, about a week, and we actually crossed back below. But you have this sort of buy signal that happened back here on March 29th, and it crossed the zero line on March the 31st. And even though we've had a period of sort of sideways movement for a few days, really for the last week, it still very much is showing that there's probably some more bullish room to go. Let's take a look at it on the 30-minute level. So 30-minute is going to be a lot. I guess it's going to move around quite a bit more. You can see back here on the 26th, we had a crossover of the MACD and the signal line in negative territory, meaning the price had been oversold, and it crossed the zero line over on March the 30th, which would have been a great bullish indication. And even though this thing crossed the signal line is above the MACD, we have stayed positive, which to me lets me know that there's likely some more room in this bullish sign. It's a bullish signal to me as well. You see the same thing kind of in the 15-minute time frame. You had this crossover. You could look at the one either in March 25th or even March 26th, but it started to cross. It really didn't fully cross both lines, cross the zero line, so cross into positive territory until March 30th. And for the most part, it stayed above there since then. We did recently cross below the zero line to go barely negative, but given the gap move up this morning, it's looking like these lines are going to end up pulling on higher again too. So you always want to know the strengths and the weaknesses of your indicators, right? So this indicator, and specifically the MACD, really can chop you up. So if all you do is trade the crossovers every time, you're going to be buying, selling, buying, selling. You can see how many times you would have probably gotten chopped up a bit. But that being said, if you implement additional things like waiting for it to cross the zero line, you end up getting a more pure signal, or at least that's what I like in my kind of trading style. So let's get rid of the MACD. We're going to do a couple of things now. We're going to look at, I don't want the long-term up move. I want this up move since the pandemic. We're going to look at a little Fibonacci retracement, just to get a better sense of where we are right now. And I'm going to pull it all the way over so that it includes both the tip of that candle and today's prices. So here we have it. So we have been around this 38.2% level, and it's just a little bit lower than what I would have called the resistance line for all of this price action that we saw in late 2020. But it did become the support line in December of 20. And then we had a little bit of support, even though we dipped below it for a couple days, a little bit of support here in late March, and it bounced off of that. And right now we are between the 23.6 and the 38.2% retracement levels. I think as long as if we cross that 23.6, the $1,218, I think there's a good chance that we're at least going to pull back up to this 1320. So that's a possible $100 right there. Not to mention the fact that if we do end up getting to where we're going to retest this high, it'll be very strong. Likewise, if we go below this we'll call it $1,050 level, which honestly, even $1,100, if you want to kind of be a little looser with it, that region, that area acted as resistance for so long, and now it's kind of support that I think we can end up seeing some really strong activity there. So if this ends up, let's pull it there. If you see price fall back below that and stay below it, I think there's a good chance that we're going to drop a lot lower, right? Probably all the way down to this previous level, right in there. Trying to get it exact for you guys. Sorry, there we go. That $900 level. So, in a $200 channel is still, that's really wide, but I do think that's the last area of a bit of support that we've seen. So I'm expecting this $1,100 support to hold and to see us go ahead and pull up to test at least this $1,300 range. So that's $100 more than where we are now. If we cross that, you could probably expect a new high. This stock clearly has a tendency to trade in a sideways pattern, possibly for months. So definitely be aware of that. And that's kind of the levels that I would look at. I'd look at this $1,100 as a support level. I'd look at, if we fall below that, the $900 range. And definitely, I think the next resistance is going to come up at 1,300. But all in, I think all of my indicators right now are showing bullish movement. So I'm going to look at some bullish opportunities in Shopify. So thank you guys so much for watching. Definitely subscribe if you haven't already subscribed to the channel. And look forward to making a video for you tomorrow. Happy trading.